So after a bit of an extended delay, today I'm going to share my thoughts about Goviex Uranium. Now, before I get into this one too much, I just do want to share the disclosure. I am long Goviex Uranium at this time. However, it's one of the ones that I just keep asking myself why. Why this one? Why do I own this one? And I struggled to come up with a solid answer that I can stick with. So to anyone who does not know what GoVX is about, well, they have lots and lots, hundreds of millions of, well, north of 100 million, depends how much you believe in what they'll be drilling up as they go on, but lots of uranium in Africa. And for their first project, they say their all-in break-even cost is $48. So lower grade, higher cost, lots of uranium, Africa. That's GoVX. Now, GoVX does have three projects. All of them are, again, in Africa. The first one could potentially be ready in 2021. I consider that one to be the most unique proposition because of the unbuilt uranium projects. That one is fairly close to coming online, to potentially coming online. Now, this timeline, if I'm remembering correctly, it keeps being pushed, but as of right now, they think they could have it online in 2021. And the second one could potentially be online in 2023. Now they are fully permitted, however, they are unbuilt. Now, why would one like GoVX? Well, like I said, they could have a new mine built and in production by 2021, which is one of the nearer term potential builds for a mine. So if you believe in uranium price spike in the near term, well then GoVX might be a play worth looking at. Now, along with a few insiders, and yes, I would be remiss if I didn't point out that one of the founders did sell a big chunk of shares in the past few months, but he still owns a lot. So along with the insiders, Denison and Cameco do own shares in GoVX, which is a positive. So what's my concern with this one? Well, if you take the fully diluted, that's including the warrants, if they were all bought out or all paid for shares, the market cap would be about almost $84 million at the time of this calculation. They have 4.2 million in debt. Most of that is covered by the warrants. Again, funny calculations here and there. Now, on the flip side, they don't have any built mines, even with all of those shares, even with all that market cap. So, and if they built the first mine, that would cost them about 360 million, and that would give them production of 2.7 million pounds. Now, at $65 uranium, if again they don't give precise costs at what their all-in sustaining cost is, so if you're using the $47 break even and you look above that, $17 above that for 2.7 million pounds would give $45 million in free cash flow above break even. So again, calculation is a bit funny on this one because of the way they use their numbers, but 45 million in free cash flow, including all of the potential dilution risk and capex for the mine, I'm not sure if there's potentially something better. Now, 45 million in free cash flow for a stock that is less than double that in market cap may not seem that bad. However, my main concern is, well, how does the mine get financed? Because if it's completely in equity, then the upside is already negative, in my view. And if it's debt, well, let's say it were completely financed in debt, it would with 45 million in free cash flow in addition to whatever is paying it off, that would take 7 1/3 years to pay off that debt, which again doesn't seem super inspiring. Now, I don't know, again, with the way they mapped out their costs, if the break-even costs include a certain time to pay back the debt. Again, not thrilled with their show so far, but in reality, it'll probably be financed by some mix. I just don't know what the debt equity mix for the financing is going to be. I wish I did. I'd have a better idea of how to value this thing. But again, this is just another question that I keep asking myself. So here's the thing. Despite all of this questions, GoVX does have a very clear investment thesis. If you think that uranium is going to get much higher very soon, let's say above $65 within the next year and a half, and stay there, although you'd probably think maybe 75 or higher would be better, this is definitely a play that has a chance to re-rate to a producer. My questioning with this is, how much of a delay will the restarts of the mines such as MacArthur River and Langer Heinrich delay a potential up move in the price of uranium? Similarly, as I've mentioned in a prior video of my uranium price target, I believe it'll probably get to $65, although I'm not sure, depending on the speed of the move and how long it takes, if it'll get much beyond that. Meaning, I'm not sure if GoVX makes or fits perfectly with what I think is going to happen. Now, GoVX does or has talked in the past about the first mover counter-cyclical advantage, meaning they want to be ready before the price mover as the price moves, instead of waiting for the price to go up and then starting the construction for their mine. Now, if they effectively try to deliver on this, if they're right, it's great and it fits them into a spot where they could be producing, re-rate, cash flow, all the great stuff. If they try and they're wrong, well, it probably won't go so well. And my question is, how far does this go? Like, at what point will they commit one way or another? Now, if they commit, let's say they start developing their mine this year and go into production in a few years, and the prices, well, it either fakes them out or just still doesn't move. What's the downside? Well, I'm thinking something like the chart of Paladin in 2011, except without most of the upside move to begin with. You can look at that chart, but basically it's not pretty what could happen if they mess this up. Now, why, in my view, GoVX is a very time-sensitive play is pretty simple. If the price goes up significantly soon, GoVX can participate, can go into production, and can supply that uranium. However, if it takes another 5 years for the price of uranium to get to a point where it might be beneficial for GoVX to commence production, there might be 5 other plays that can produce it cheaper. I'm thinking of some. I don't want to mention them here, but there are some around that at this point need more time, but in the future may be ready. So I mentioned at the beginning of this video that I keep asking myself why I own GoVX. Now, I don't know that that's necessarily accurate. I keep asking myself all of these questions, and to this point, I don't have a strong answer. Now, I keep asking myself, how much better will GoVX do if the price of uranium increases in the near term in terms of potentially going into production and re-rating and having cash flow compared to something else? Or how much will the other mines that are going to be coming back online because they're already built, how much will that delay the real up move in the price of uranium, if at all? Similarly, do we see $65 uranium before 2020, which is currently 3 years out and would effectively, if everything else produces according to, or proceeds according to plan, that would nullify much of GoVX's advantage. And I also, along the same note of how much better would GoVX have to be, would I be better off just buying some producer that currently is a marginal losing money / making money, but already in production? How much better would GoVX be rather than just buying the straight producer that would be levered to the upside in price? I don't know. So right now, GoVX is working to try and reduce their costs, implement solar in the desert to cover some of their power generation. And I find that kind of ironic, but I'm not going to go too much into that. I'm a believer in nuclear power. Don't take that the wrong way, what I just said. Also, in addition to reducing their costs, if they are accurate in what they're saying now, they're going to start development of the mine in 2019. They claim they will be doing that. I don't know that I necessarily 100% believe that, but if they don't, I mean, they have obviously, not lived up to what they said they're going to do if they don't. But I believe they've already delayed that significantly, but at this point, it's getting to the point where it's now or never for them. So we'll see if they do it. So in conclusion, this feels like if it goes wrong, it could go wrong spectacularly. Now, like if they fail, if they don't succeed with timing the cycle correctly, they could effectively be worthless. The equity could go down 90% or significantly more because they might have to issue tons and tons of shares to pay off the debt if they fail. But on the flip side, like I said, they are in a position where if the price moves near term, they would be particularly effectively leveraged to it. So I think it's important to weigh what you think is going to happen with what is the downside and what are the other possibilities for upside. And then, as always, compare it to the other options that are out there. And thanks for watching, everyone. I know this video is a bit wavery, but that's really my opinion on GoVX right now. There's a lot of unanswered questions. Are they going to do this? What can they do? What are their real options? Now, I ran into in this video a little bit where I was going to be talking about game theory a little bit. I'm going to probably make a short other video where I explain why that affects GoVX and why it might not because of contracting. Expect that soon, I hope. But yeah, until then, thanks for watching this. I'd love to hear your thoughts on GoVX, and I am long, but I'm hopeful on this one, but it's, again, a small part of my uranium portfolio, and this is not a recommendation to buy it or any uranium thing. So I hope you enjoyed, and I'll catch you next time.